Good morning, good afternoon, and good evening, and welcome to another edition of Jedi.Tax Online. Today is June 20th, 2021. Thank you for joining me. My name is Rogelio Noriega. I am a California registered tax preparer who will be undergoing registration for New York this upcoming year, as well as a few other registrations for the numerous clients that we're serving across and around the United States. Thank you for watching us. We're live on Twitch, on YouTube, on Facebook, and we're eventually going to be live on our NDB Media page and hopefully on our Jedi.Tax page as well. But either as it may, or our YouTube Jedi.Tax as well as on the Jedi.Tax page. Just ask you to bear with me. Anyway, it is pleasant 75 degrees. It's in the evening on Sunday. Happy Father's Day to each and everyone who's watching. Thank you, General Dalton. Appreciate the love. And I have to put this out there. It's our disclaimer for Jedi.Tax Online. The information contained within this program is provided for informational purposes only and is not intended to and must not be taken as a substitute for obtaining tax, legal, or other professional advice from a tax resolution professional, such as an enrolled agent, CPA, attorney, tax preparer, consultant, whatever. Presentation of the information via the internet is not intended to create, and a receipt does not constitute a tax professional client or attorney-client relationship. Internet subscribers, users, and online readers are advised not to act upon this information without seeking the advice of a tax resolution professional. This is what we here at Jedi.Tax refer to as the Selena rule. So it was made clear to us that we needed to do this, and I kind of quasi-kidded about it, but now we're actually doing it. So the information contained is provided by Jedi.Tax. While we endeavor to keep the information up to date and correct, we make no representation or warranties of any kind, express or implied, about the completeness, accuracy, reliability, sustainability, or availability with respect to the website, this program, or the information, product, services, or relegated graphics obtained on the website for any purpose. Any reliance you place on such information is therefore strictly at your own risk. We assume no responsibility for any errors or omissions in the content of this website or such other materials or communications. So this program is provided as available basis only. So take it for what it is. We will post our legal disclaimer a little bit later, but we still have a lot of stuff we want to get to. First thing I would like to mention is the joke of the day for tax purposes. Monopoly's fun, but it has some really old stuff that isn't valid anymore. There's free parking, a luxury tax, and rich people can actually go to jail. That's in Monopoly. You know it's just a game. You guys know how the month of June got its name? June is a great month. School's out, and this is from dictionary.com. The weather's warm. Perhaps Anglo-Saxons who spoke that linguistic ancestor of English known as Old English were onto something when they collectively called June and July Leoa. That's pronounced. Let me back up a moment. Collectively called June and July Letha. That's pronounced Letha. With the on its own, June was sometimes also referred to as Era Letha, which is Era first Letha, and July Ethelia, or after second Letha. So how did the 6th month of the year go from Letha to June? June ultimately comes from the Latin Lunius or Juno, Luno, referring to the Roman goddess. The J sound in the Latin's Luno emerges in French, and its spelling with the letter J didn't settle in English until the late 1600s. The name Luno itself appears to come from the Latin juventus, meaning youth, which is related to words juvenile and rejuvenate. In ancient Rome, Leonis was the 4th moon of the year in a 10th-month calendar. So there's a little bit more, but just want to let you know that's where it originates from. Thank you, Big Dog, for joining us. That is, of course, the Big Dog right there. So I want to let everyone know, again, as I mentioned, and these dates are important. Today is June 20th, Father's Day. Happy Father's Day to each and everyone. We're still in tax season. Most everyone refers to tax season as June or January 1st through April 15th. That is the height of the season, but and almost everyone refers to it as that. But for me, who is year round, my season does not end until October 15th. So generally, if you request a federal extension, you are extended to October 15th. There used to be other rules about extensions. There was an August 15th extension, and then there was a October 15th, which was the final one. That means you got to get it done. You have to have the prior year done by October 15th. Everything is still on schedule, no extensions. Got to get that one out. Well, folks, it looks like in many parts of the world we are coming out of the COVID nightmare that was. So I have some steps that you may want to take for your post-COVID-19 budget. These are a tad important, so we're going to get to them right now. Of course, good morning or good afternoon, Thomas, DA, Manny. Hello, Manny. Thank you for joining me. I'm still looking to do a program, and I think I'm going to do it in July on first home purchases, which I'm sure you already purchased your home already. But it's been a little bit of a nightmare. I do want to thank everyone that has been wishing me well. Um, it May and June are turning out to be a very difficult month. So I do want to thank everyone that sent me their kind thoughts and wishes. You know, I am getting over the diverticulitis, and it is still causing me problems. Case in point, I have the yogurt right here, and there are 5 steps. The reason why I mention this now is, 5 steps is there's actually 4 steps. There's actually 5 steps. Another one has to be your health, folks. And if I can't provide it, then I don't know what. But these are 4 steps that you should take right now for your post-COVID-19 budget. Number 1, take a stock of changes in your cash flow. Although easier said than done, cataloging the changes in your cash flow over the past year is an important first step in planning ahead. For each change, pay attention to whether your spending has been higher or lower in that area. If you happen to use Quicken, which I do, you can find this information easily in either your budget or your cash flow comparison report. To see account trends such as changes in your savings, run a net worth report and filter to show only the accounts you want to see. Now, you can also do this with with Bank of America, and I'm sure with a few other accounts. A vast majority of people are using their debit cards and their credit cards, and everything is formulated nicely in your account statements. You can run reports, bring up totals, and see what you're doing this month as opposed to the month before. And then you can just compare it to prior months. So the first thing you have to do is take stock in your cash flow. Income changes. Excuse me. I apologize. I still have that urge. Spending changes. Tax changes. Speak to your local tax consultant. The 2020 tax year included a number of changes that might have left more money in your pocket than otherwise you would have kept. If you benefited from any tax breaks, be sure to capture how much they affected your bottom line. And I do have quite a bit of information that we're going to get to regarding tax changes. So it's very possible this program may go the hour. Hopefully it won't, because I don't want to be any more monotone. And quite frankly, I just have to see how much energy I have. It's come to that. But if Mr. Roberts wants to do a Nightmare Hunter tonight or anything, I might be open. But all kidding aside, it depends how long I can go. Debt changes. I have to tell you that I have been encouraging my daughter to use the unemployment earnings to pay off her debt. She's done an excellent job. I, on the other hand, have not. I have eliminated more debt, and I'm really happy about it. But let me see. Can you tell us about the advanced CTC? Oh, I will, Manuel. As a matter of fact, I might skip to that as soon as I go through these steps real quick. So please stay with me. I hope so. You'll be able to tell. Apparently, I wear it on my sleeve or on my face how I'm feeling, so you know if I'll be up to it or not. So yes, I have news on the CTC, which is the child tax credit. So we're going to get to that in a little bit, and I'm talking minutes. Okay, look at debt changes. How much debt you incurred, paid off. There's two schools of thought here. If my thought has always been this: if you have five debts that you have to pay, the one that you pay the most, and what I mean is not necessarily the highest balance, but the one where you pay the most interest, pay that one off first. Go minimum on everything, but pay the one with the highest interest because that's the one that you're paying the most on. I've always believed in that, but uh, I'm willing to accede or acquiesce to another way of thinking is that if you have five items of debt, one of them is just for the sake of conversation 10,000, and the others are 5, 4, 3, and 2. Others advise pay the minimum on all of them, but the one with the least, belt that one out first. Kill it off. Pay it off. Because psychologically, it's a victory. And knowing that I deal with money in that way, I get that. And I understand that. And I'm not going to dismiss it. Someone has a better idea. I'm bringing you that idea. My concept is to put more money in your pocket now. So I see debt levels reduce across the board. And I I may have to pause from time to time. No theatrics, please. Just I may have to pause from time to time. So if any of my hosts want to join me and maybe have to cover for me if I have to pause that might not be a bad thing. But anyway, those are the two thoughts of thinking when it comes to debt. I'm not talking bankruptcy. I'm not talking about any of that stuff. But we are looking to bring a bankruptcy attorney to join us. We're going to have a mortgage broker join us, and we're going to have a real estate agent join us, not all together in one, but over the next few weeks. We are extending this. And we're going to be also announcing a new program, which will be premium membership only. But I'm going to be very judicious on that, but I am opening up a paywall. I will have specific items where I want to talk about, and it will be how to resolve certain things specifically, such as how to complete a W-4. So, duh, but I will go over the figures, the numbers, and show you how to plan your refunds. But anyway, savings changes. Along with debt changes, you also want to look at your savings changes. You relied on it to get through it. Now you want to get those numbers back up. Goals and planning changes. Did you decide to downsize? What did you want to do? React to it, take a look at it, and plan ahead. Not just live for the moment, but plan ahead. So that's the first one about taking stock. The second one is note whether each change is temporary or permanent. So when you come up with these list of items, goals and planning, savings changes, debt changes, tax changes, spending changes, and income changes, note whether they're temporary or permanent. So you may want to consider what you may want to do on if they're temporary, well, for how long? If they're permanent, what's that going to do to your lifestyle? You want to think that through as well. The third thing is take stock of new changes on the horizon. We're talking about the emergency fund again. And as you know, I've mentioned membership in the 400 Club, folks. But I want to tell you that I have several clubs here that I want to talk about. The first one is the Century Club. I know I shouldn't do this because this is going to make people are going to get pissed off by it or whatever, but the Century Club is what's in your hand. The first thing you need to go for is, if you're associated with Jedi.Tax, is you want to go to the Century Club. You've heard the Capital One Quicksilver commercials, what's in your wallet? Well, that's what I'm telling you, what's in your wallet. Good evening, Josh. Good evening, Thomas, for the likes. Michael Day, Casey Shapiro. Thank you, one and all, for the likes and love. What's in your wallet? And ladies, what's in your purse? You have to have $100 minimum. I'm not talking credit card. I'm not talking debit card. $100 cash. In the event of an emergency, the older folk will tell you a $100 bill will get you home. It will. I have a little more than 100, but the point is, I am a member of my own $100 club. These are the ones that I have here, and I have them in my wallet. So I challenge you, first and foremost, join the Century Club. Make sure you have $100 cash in your wallet or your purse. So the next thing is the 400 Club. As you know, we emphasize that as well. And we did get another like. Good evening, Cindy. Thanks for joining. The I apologize. It's that urge. So I probably shouldn't have done the episode tonight, but it is what it is. The 400 Club. As I've mentioned, 75% of American households do not have $400 available. I'm not talking about what's in your wallet. I'm talking about what you have in your household. Think about that, folks. There's 335 million Americans, give or take, and there's approximately 100 million households. 70, it's more than that, actually. I think it's 150 now that I think about it. What's your definition of a household? Okay. Anyway, the households, 75% of all households in America do not have $400 cash for an emergency. Folks, once you join the Century Club, then you got to move up to the 400 Club. And that's my challenge to you. As I've been telling you, I've been working on one of my accounts just so that we could do this. And I'm going to show you the balances as I've been working on it. I think I've already surpassed. I may have cheated just a little bit. But the point is, I was dropping $50 every 2 weeks into it. And let me see where I'm at. So just to show, I know I should have had a screenshot on this, but hey, see your feeling. Oh, I entered an invalid password. How's that possible? I think right now that I'm stressed. Oh, whatever. Okay, it has more. I think it's like $350 on this one account that I'm using for these purposes. But the goal is by the end of the year, folks, if you're associated with me, if you know me, if you're my client, compatriot, family, however it is, let's get out of that 75%. Let's not be a number. Let's have $400 for emergencies in our pocket. And as we move forward, we're going to have other items that we're going to be able to get to. But the first one is the Century Club. The second one is the 400 Club. And then when we enter the 1K Club, that's for the chingones. That's where we get to do stuff. And you can do some things with your finances once you have $1,000. But that will be in another program. But those are the clubs that we have right now. So, going back to the 4 items that you should be taking a look at post-COVID-19 for your budget, take stock of the new changes on your horizon. I was talking about the emergency fund, your work changes. I've been telling everyone in the known universe, folks, there's 13 million cashiers in America. Going to McDonald's, going to Walmart, those jobs are gone. And COVID-19 accelerated it. I don't want to be the one that's the bearer of the bad news, but I am. You have to plan for that. You always have to think about what your job is and what you're doing. Can it be replaced? My job will not exist after me with my employer. There'll be place savers. Well, as a matter of fact, in Central Yard and Public Works, my job no longer exists. I was replaced by 5 people. That's how stupid I was. That's how much I did. Not there anymore. 5 people. One in 4 different locations. That's how much work I was doing. But anyway, the point is, my job, the way that I see it now, where I'm at with my current employer, will not exist moving forward. It is not something that you can count on. It's just changing. Look at the clerical field, these secretarial, administrative assistants, the stuff that they had to know 20, 30 years ago. Stuff's gone. The assistant is still there, but they're not the same secretarial. They're administrative now. They do quite a bit more. So the skills are different, obviously not the same. What I'm telling you is take stock in your position. Childcare changes. Another effect of returning to work or returning to a commute can be an increase in the cost of childcare. Be sure to calculate that into your budget along with other work changes. On the other hand, the American Rescue Plan Act has expanded the U.S. child tax credit for 2021, and many families will start receiving payments as early as July, well in advance of filing their 2021 season. 21 years. And that's where we're going to get to it right now. So, Manuel, hopefully you are still with us, but we're going to talk about the CTC right now. I know. I think you asked that 3 minutes in, and it took me 17 minutes to get to it. Okay. There's a revamped credit for 2021. The stimulus law enacted in March hikes the $2,000 per child credit to $3,000 or $3,600 for those that are under 6. And now lets 17-year-olds qualify, and it makes it fully refundable. For those of you that know and prepare your taxes, $2,000 is the credit, $1,400 was fully refundable. What does that mean? Very quickly, it means if you have zero tax and you have the child tax credit, you will not receive the $2,000. You will only receive $1,400 back, refundable. That's the way the law used to be. Now it's fully refundable. And it was $2,000. It's now $3,000. And if you have 6 and younger, it's $3,600. And the cutoff date was 17. So the year that your child turned 17, you could no longer claim that credit. Well, now it's going to be the year that they turn 18. It's been extended for 1 year, so there's going to be a lot of talk about this, whether it's going to continue beyond this. As of right now, it's for 2021 only. So, excuse me. It begins to phase out at AGIs of $75,000 for singles, $112,500 for household heads, and $150,000 for joint filers. This credit is reduced $50 for each $1,000 of AGI over the applicable threshold amount. The phase-out applies to the $1,000 or the $1,600 increased credit amount for 2021 and not to the $2,000 credit. Families who aren't eligible for the $3,000 or $3,600 credit who have AGIs at or below $400,000 joint returns will still get the $2,000 credit. So remember that. This is just for the amount over $2,000 for this year only. This is a bonus, baby. Okay? So, next year, it'll be $2,000, and the regular phase-outs and all that will still be in effect. Now, also under this law, the IRS is required to pay half the child credit in advance through payments to be sent each month or so to qualifying families. Beginning sometime this summer, about July 15th, which the IRS has announced, and you should head on over to Jedi.Tax on Facebook for all these regular announcements. The amount the family will get each month is based on AGI, the number of children, and the ages of their kids. Families who qualify for the full $3,000 or $3,600 could see checks of $250 or $300 per child for 6 months. Those with higher incomes who qualify for the $2,000 credit could get monthly payments of $167 per child. Did you get that? Almost everyone is going to start receiving something starting July 15th. Working parents get a higher child and dependent care credit as well. For 2021, of as much as $4,000 for one child and $8,000 for 2 or more kids, up from $1,050 and $2,100 for 2020. Parents with up to 125 of AGI are eligible, and AGI, folks, is adjusted gross income. Manuel, I wonder if that answers some of your questions. Let me know. The AGI is your adjusted gross income. Remember that, okay? So, working parents can contribute to a dependent care FSA, federal savings account. In 2021, they can put up to $10,500 of pre-tax wages, up from $5,000 if the plan allows. So, the following changes on cash gifts to charity in 2020 also apply. Non-itemizers. In other, oh, thank you, Cindy. No. Just like the stimulus for this year as well, the stimulus we received on or about April of this year is not, you don't pay it back. And the child tax credit, which was increased for this year of 2021, you do not have to pay it back. So that is cool. That's more money. And Cindy, that's not bad. I don't want to reveal, but because I know some of the situations that I have on my clients. Thank you, Manuel. I do appreciate that. Yes, you don't have to pay it back. So don't want to reveal any information, but it should be good. It should be very good. So if you need to contact us right now, please set up a telephone appointment and please call me. Set up the appointment and call me. It says it in the appointment thing. So, but it's all good. I'm sure I'm going to hear it from someone right now who's in the chat room, but that's okay. I'm trying to help. Just remember that. I like that one. Oh, she did it twice. You know, on my sports program, when I say something like, you stupid moron, and there's no equivalency here. I had to put that one out there. I always say on the program, am I stuttering? Am I saying the same thing over and over? Obviously I'm not, but that's a joke. So Cindy was so excited she put it twice. So it just reminded me of what I do on the sports program. Be cool. I wasn't implying anything. So you know how it is. I'm all over the place. So continuing with the post-COVID-19 items, there are insurance changes. If you're planning on buying a new car in 2021, remember to include the increased cost of insurance in your budget. Yes, etc. Because remember, you weren't driving. I know that AAA gave us some money back. Thank you. Thank you. I'll be here for the rest of the evening. So, review your insurance policies if you have to add people or subtract people. You noticed I whined about 2 weeks ago that I went to my insurance company and I I have 3 cars, 2 drivers. I was attempting to remove one, and as such, my insurance rate for the year would increase $1,000. I have 3 cars. You also have to look at will and estate changes. Folks, we can give you some idea about that stuff, but we here at Jedi.Tax, that is not our expertise. We can have conversations because we know what it is, but when it comes time to getting an estate done, you need to see a professional. And if you want the name of certain professionals, go ahead and contact us and we can provide you those contacts. But folks, a will that's notarized in California, that's illegal. A notary cannot notarize a will. It has much more value if, say, if I were to prepare a will, which I do have a will, it's not signed, it's signed by me, and I do update it regularly. But if you have a will, and say a parent has several kids, if the parent wants to assure the will is followed through, you have the kids sign off on it as well. That works. But again, speak to a wills and estate attorney. I'm just saying there are ways that you can get around it, but a notary? No, it's illegal in California. A notary in California is simply a witness and translators. We can do that too, among other things. But keep that in mind. If your will is notarized, it has no value whatsoever. It will not hold up in court. And the notary is an idiot for having done so. Oh, and also, if you are in the Spanish language land, if it says immigration and inmigración, and then it says notary public or notario público, that's a no-no. So you also want to look in step 3 in a debt reduction plan. You also want to look at retirement plan changes. I did have a significant change to my retirement this year, but I've already taken the steps to move forward on it. I am still looking. Well, let me tell you, this excuse me, this health scare has caused me to evaluate my medical coverage. When I went in 2 weeks ago, and I was in for the 2 days, the emergency room costs, had I not been insured, one procedure was $23,000. That was probably the MRI, and then with everything else, came up short of $30,000. I paid. Well, I'm expecting to pay $50 an emergency room fee, but no, since I actually went in, I'm not going to pay that $50 fee. I consider myself fortunate. Knowing what happened over the last year, you want to look at here in California, Covered California. So covered.ca for insurance coverage. You have to take that into consideration. I'm talking about you adults. If you have children, you better have an estate. You better have a will. And you have to have insurance coverage. And a life insurance policy. We'll get into that later. Step 4 is you want to plan for growth. This is the easiest one of all, and probably one of the more frustrating ones. If you already have a budget, a critical look at the budget today can help you set yourself up for success in the coming year. So again, if you have Quicken, it works. It's really nice. But I didn't expect to be a mouthpiece for Quicken, but hey, it is what it is. So I have, this is where the older audience probably will tune out, but it applies to everyone, even if you haven't done it yet. 6 smart money moves to make in your 20s that can help you save money. So, number 1, create a budget. Build a good credit score. We're also going to be talking about credit and credit repair. It is something that we've done here at Jedi.Tax. We've assisted clients in fixing their credit, but we are going to be opening up credit repair services over the next year. It is on our goal. As I mentioned to you, other things that I have been working on, my ITIN. I am going through certification now. So I am able to certify documents. Well, I will be able to certify the documents very, very soon once I'm certified for that. And I'm going to be expanding into insurance right after the ITIN. And after the ITIN, we're looking at credit repair, which is important. You want to set up an emergency fund. Start saving for retirement. Folks, the worst day to save for retirement is tomorrow. You start today. Pay off debt and develop good money habits. So those are the things that you want to do. If you want additional detail, I have some links that are available, I believe, from CNBC or USA Today, which I could share the links with you. I wish I had them right now, but I do not. But I do have copies of the articles, and I need to be respectful of the material. So if you would like links, I will be able to provide them. 5 common credit mistakes you should avoid in the 20s. See, we're already kind of getting into the credit stuff right now. Obviously, it can be hard to get your finances together in the 20s, but this is what you need to do, because these are the mistakes that people make regarding credit. Spending without a plan, using debit over credit, waiting to establish credit, not understanding key terms, and getting store cards on a whim. You should at most request your credit twice a year. That's it. That's your first. Anything beyond that looks bad, looks desperate, and your credit score takes a hit because of it. But go ahead. If you request credit more than 2 times, fine. It's just understand you'll lose some ticks on your credit score. It's not a biggie, and it depends on your entire credit profile. So there are a lot of factors. How much debt, what's your ratio to credit to debt, your income, how many accounts you have open, payment schedule. I think 30 to 40% of your credit is based on your payments made. And another 30% is your debt, your ratio of debt incurred. So in other words, if you have $1,000 in credit, what's your ratio? Are you at $970? That's 97%. That's bad. Oh, I know what those sounds are. The fireworks are going off in the background now. So, spending without a plan. You know, there are so many credit cards that give you money back just for spending. One of my favorite cards, as you know it, I talk about it. I love it. It's my American Express card. That's one. And let's see, the other one is my Discover card. And of course, my Target. 5% at the register, folks. This is good planning. If you're going to go to Target and you're going to spend, get the damn card. There's no annual fee. In other words, as soon as you go to the register and you run this card, it's 5%. 5%. What are you doing? And yes, people, oh, well, oh, I've had a credit card. Oh, good God. Get the card. All right. Discover gives you 1%. And I think 2% on some other items specifically. You've got to find out and check. But American Express gives you 1% off everything. It'll give you 2% off gas and 3% off markets. So just paying for it, you're instantly going to get money back, which helps you to pay down debt or allows you to buy other stuff. So that's what you need to do. A good place to start when it comes to fixing your credit is called Jedi.Tax. Oh, sorry, just kidding. I'm kidding. We're going to tell you the same thing. Capital one of the easier credit cards to get. And if you're declined, they will probably ask you to send them $100 minimum to open an account. And if you're good, 6 to 9 months later, they refund the money to you. You can apply it as a credit or they'll send it back to you. Come on, man. It doesn't get much better than that. 2 people I know in the last 4 months, I'm helping them with their credit. I'm not being paid for it. I'm not taking payment, but I'm helping them because it's in my nature to want to help people. So, the other 5 common credit mistakes, I've mentioned the first one, spending without a plan. 2 is using debit over credit. It's a no-no, folks. A debit, if someone gets your debit card, they can conceivably clean out your account like that. And it'll take time to get your money back. And you may not necessarily get all your money back. How long did it take you to report it to the bank? And what are the conditions that the card was lost or misplaced? Don't use debit cards to make purchases on the internet. That's from Uncle Rogelio right there. Use a credit card. That's it. Use a credit card for those purchases. And if you have to use a debit card, don't save your information with the online account holder. Don't do it. There's so much activity going on where people are having their accounts broken into because of internet warriors. Don't do it. Look, often younger consumers rely on debit cards more than credit card, but it's good because they fear falling into debt. But actually, credit cards are more secure when it comes to fraud protection, which is just what I mentioned. And they give you the ability to earn cash back on everyday expenses such as groceries, streaming, and gasoline. Using a credit card is also a great way to build credit, whereas debit cards have no impact on your credit score. None. Kaput. Nothing. Nine. No. Excuse me. Just to make sure you don't use a credit card to spend more money than you have. Duh. Another mistake is waiting to establish credit. What are you doing? Go to a credit union, open an account with a credit union, get a signature loan for $1,000, take it in the shorts because you're going to pay the loan back over time. That's an easy way to establish credit. Capital One. There are other agencies out there, not only Capital One. It's just they work, and I've been able to help family and compatriots to get their credit better with Capital One. I hold more than one Capital One, just to give you an idea. And I do so because of different rewards and stuff like that. But I know I have one car one, I have a department store one or whatever, but yeah. And the trick for me is I go and buy something and then I pay it off. in that billing period. And if your billing period just closed and you buy it, you have the entire billing period plus 25 days. That's a free loan. That's almost 2 months if you do it right. It's all about doing it right. So if you're a bit short, then why are you making the purchase? But if you're a bit short and you want to float a little bit of money, credit card, best thing. Your payment for the purchase can be due in as little as 30 days to as much as almost 55 days, depending on when in the cycle you purchase. Do not wait to establish credit. And then getting stores credit cards from stores on a whim. These are high interest cards. They give discounts, they give a lot of stuff, but if you're going to carry debt, those may not be the best. But they give you lots of discounts. It's called managing your money. Manage your money. So, and obviously not understanding key terms. When you sign up for a new credit card, it's easy to overlook the terms and conditions, but failing to review and understand key credit card terms can lead to costly mistakes. Take time to learn how your billing cycle works, what the grace period is, and the difference between the statement balance and your current balance. Make sure you know how much you're being charged in interest, known as APR, and how your card issue calculates the minimum payment. So, those were 5 common credit mistakes you should avoid in your 20s. That one was close. That one was very close. So the kids are firing off the fireworks. Good evening, Sonia. Thank you for joining me. So I've gone over quite a bit of information. I knew I had more than 30 minutes worth of stuff, but I didn't think I had the full hour, and sure enough, and I don't. And I do apologize. This is not fun. The diverticulitis is not fun. But I've turned the corner and just got to get through it now. So I do want to thank everyone for joining me. I did get through everything that I wanted to get through. There was my list of stuff. See it? Kind of cool. I planned it in advance, and it was cool. I was able to do it. So I hope you did appreciate the joke. If you didn't hear it, go to the very beginning of the program, and it'll be right there. But unfortunately, I am having that urge, and I don't want to embarrass myself on air, as I already did once. It was bad. Okay, I was doing the program, and I think it was about a week ago, and you could tell on my face, it was like, I need a second. And before you could tell, oh my God, the urge to want to bring it all up. Oh, that was no fun. But I got to tell you, I am eternally grateful for I can have almost anything. It's just I have to watch what I take during this time frame. And I understand why everyone was telling me no seeds. I get it now. So cucumbers are off the table. Tomatoes, where the seeds are, I have to cut them out. So when I prepare sandwiches, simple sandwiches, chicken or turkey sandwiches, I have to take out that part of the tomato that has the seeds. Jalapenos, out. Any sort of salsa is out. I understand caffeine is out, but yet I am allowed to consume coffee. And in certain places, they say no sugar. And I asked my doctor. She said, you may have coffee. So I was really happy. So forgive me. I'm going to take a quick little sip of the yogurt. Didn't want to scare anyone right there, but it does soothe the stomach. And I went with peach. I'm saving the strawberry one for a little bit. So I want to thank everyone. The next program will be for Jedi.Tax Online. Will be today's the 20th. So looking at July 4th. It'll be July 18th. That will be our next episode. But the big dog and I may be traveling that weekend, so we don't know. Thank you, Cindy. I think I did wish you a happy Mother's Day. And if I did not, happy belated Mother's Day. And for everyone here, happy Father's Day again. And of course, for those that were last month, happy Mother's Day. And there it is, folks. You know what? Look, we'll put on calendar when our next episode is. But, yeah. It's not fun. Just got to avoid them seeds. And no Coke. I haven't had a soda in about 3 weeks now. So when I mentioned the 4 steps to do post COVID, the fifth one is watch your health. It's portions, folks. Portions. You can have almost everything and anything. Watch your portions. But for everyone else, it's good. We may be doing another program in a few minutes. We'll check it out. I'll see how long I can go, but I want to thank you. The Nightmare Hunter may do a special episode tonight, or I don't know what we're going to do. We're going to do something special, but we'll be on in a little bit. In the meantime, thank you for spending time with me. Thank you for allowing me to provide this information. I like helping people. That's why I do this. I'm going to continue doing it. So, thank you for the questions, and we'll see you guys on the other side. Peace!